Hey Harold, how are you? Hey Harold, Montenegro was good actually. So not just a meeting, it was, if I'm going to pronounce this incorrectly, but it's the Milicer Development Forum. It's a military development forum, basically. It's their version. This is 24th anniversary, 2030. I think it's the 24th forum, annual forum. It started out as a military forum for, I guess, obvious reasons 24 years ago. Those of you who don't know how obvious that is, just Google former Yugoslavia. I don't know, or late '90s, and you'll get the point. Um, but it turned, and now it's more of a, let's say, just development forum in terms of everything in the country, whether that be economic development, capital markets, whether that be ecology, anything that where the country is developing. So I sat on a panel, one panel, and then kind of like a private interview inside of that forum. I participated in a lecture at the university as well as a kind of master class of blockchain for 7 different government organizations. And yeah, went very well. Met a few interesting people aside from meeting lots of people inside the government, prime minister, the head of the central bank, head of the capital market authority, et cetera. But yeah, we'll bring this back up, I'm sure, in the question and answer side. This way, more people can hear about what happened and how it went. But it went very well, and we'll probably be back there again in a month or so, maybe 6 weeks, for the next step of the process, which will be once CoinMetro is inside that sandbox. And how we begin to offer regulated assets, and probably start to do some publicity locally in Montenegro. It's funny that during the conversation with the students at UDG in Montenegro, there's about 50 students taking part in this lecture, and 12 of them actually asked me afterwards how to buy Bitcoin because they simply don't have access in Montenegro. So pretty good ratio, 12 out of 50. Obviously, most of these kids are finance majors and economy majors. So I guess you won't see that same ratio on the street per se. But there's definitely interest, just like there's interest in many parts of the world where we think that everybody knows what Bitcoin is, or at least has the ability to buy it if they want to. That really isn't the case. We're talking about a country in Europe, maybe not the EU, maybe not the EEA, but still on the continent of Europe that has banking connections into the largest economy in Europe, Germany, and they have no real way to buy Bitcoin. So interesting. Definitely something that we can take advantage of and assist them with. Take advantage from a business standpoint, but assist them in not only the CSD and the MTF side, but also just simple cryptocurrency exchange, which doesn't exist there. All right, guys. So we're about 2 minutes after. I guess we can probably get started. Bjorn is not usually. Where's Bjorn in his funding question? It's supposed to come in like within the first minute. It's supposed to be almost on cue. Okay, so I'm sure it'll come in at some point. So let's get started this week. For those of you who this is the first episode you watched, or maybe you watched before but never caught the beginning, I don't know how you can call yourself a fan if you don't catch the beginning. But this is our This Week in Crypto. It's basically an Ask Me Anything session, an AMA. But before we get into the AMA, we like to do 2 things first. One, I have a list of 10 this week, well, still 10, yeah, 10 pieces of market news that are curated by our elite Telegram group. There's Bjorn. I go over those pieces of news, usually do about a 1-minute explanation. And then we move on to the second piece, which is Kevin Explains Crypto. And I usually have either a word or a phrase that's crypto related, and I explain what it means. Simple as that. Doesn't take that long. And then we move into live Q&A and Reddit questions, also curated from last week. The live Q&A here on YouTube, I would expect we're going to be doing that somewhere around 3:15 local time in the next 12 minutes or so. So if you want to ask a question, you can post it now, and I'll get to it in about 12 to 15 minutes. Or you can just sit around, have a listen about the news in the crypto world this week, and some non-crypto news. I think we're going to have a bit of a lecture about this Fed panic printing 53 billion, because if I see this news story one more time and people acting like the world is coming to an end, I'm going to take out a gun and shoot myself. Because people obviously that think the world's coming to an end don't understand how the monetary policy actually works, and how overnight rates actually work, and why the rate fluctuates, and why the Fed pumps in money, and where the risk really actually lies when they do that. So we'll get to that too. I think that's like number 8 or 9 on the news stories. Okay, so here we go. And I see some guy, the two Thomases. Great to see QNT getting listed. Nice fiat on ramp for us. Yep, nice to see you here as well. So anyway, I'm going to jump into these news stories, then we'll get back. If you have a question, post it. I'll get back to it in a few minutes. So here we go. Number 1 on a list of 10 in news stories this week, OKX Korea delisting all privacy coins, including Monero, Zcash, and Dash, as these violate FATF's travel rule. All right, I'm going to break this down into 2 pieces. One, those coins, even in and of themselves, by themselves, do not violate the FATF rule. The exchange can still move it. The exchange obviously onboards people. They onboard people, they take KYC, or they should. That means if those clients are doing business, the travel rule only says that the information behind the owner of the account needs to be transferred in whole to the bank or the, let's say, financial intermediary that the exchange or the bank or the financial intermediary is sending to. That means if there's financial intermediary A and financial intermediary B, and you're moving funds from this one to that one, this has to provide information to this one. That's it. Privacy coins don't stop that from happening. Having said that, I mentioned months back that exchanges would start delisting these, and the reason why is that, well, it's very difficult. Most regulators are under the impression that Bitcoin is anonymous. When you tell them it's pseudo-anonymous and you explain to them what pseudo-anonymous means, meaning partially anonymous, meaning that everything can be traced and tracked, and there's far more traceability on the Bitcoin blockchain than there is in traditional finance in many ways, they're okay with it, or they start to become okay with it. Then when you tell them, oh, and by the way, there are these privacy coins that with a flick of a push of a button or by default make everything anonymous, or at least try to. Well, they don't like that. So eventually these things may come back into circulation, but they're gonna have a tough time on regulated exchanges, regulated brokers, and regulated dealers for the next months to years before there's more of an understanding and more technology behind the traceability of those blockchains. Number 2 on a list of 10, Kraken bug apparently lets users buy Bitcoin for 8K and instantly sell it for 12. So I read this because I just wanted to see exactly what the error was. They don't explain the whole reasoning behind the error, but essentially what this news story says is that there was some issue where people were able to buy and sell on the wrong side of the book. What they also say is that any stop outs and anything that happened in between this massive candle that was formed were actually cleared at legitimate pricing. So even though the stop may have been hit at, let's say, 8,200 on a stop loss, it was actually filled at 10,300 or whatever the actual given rate was. So nobody lost money. Maybe they also said nobody made any money. So that would mean that you had no one actually bought and sold. You just had people buying or selling. My question is, that means that no one actually bought at 8 or sold at 12. It means that it was printed at 8 or 12, meaning on a chart, it looks like you bought at 8. But in reality, the spread was so wide because of that, you were buying on the wrong side of the book, that you probably actually bought at 10, even though it printed at 8. But there's not enough information to make so I guess the point here is Kraken, old exchange, one of the oldest, 2011, still has bugs. So there you go. That's what I take from that. And what that and that's not just so that I can smile and say, even they have bugs. Every major company in the world, there's always bugs. The innovation and, let's say, maintenance and updates stop when you hit perfection. So if anybody out there can tell me what's perfect in this world, I'll go ahead and try to listen to it. But I can tell you nothing is. So that means updates and innovation and creating and then finding of and destroying of bugs is an ongoing matter, and it never stops. And this just goes to show you that no matter how long you've been in business, no matter what that business is, you're gonna run into issues. That's just the way the world works. Number 3 on the list of 10, your crypto exchange can't send even $1,000 US dollars without exposing you. This is probably also linked to the FATF Financial Action Task Force rules. Let's see. I'm just going to hone in. Yep. So yeah, basically what this is saying that any transaction over $1,000 US, they're supposed to apply this travel rule. It's true. First of all, FATF is not, they can't oblige anyone, a single, like let's say a single exchange to do this. But the countries can adapt these rules and then look to police them, right? What I'll have to say is this is moving money from one exchange to another. I don't know why people get all their in a twist about this. This is crypto, people. So if you don't want the travel rule to affect you, open up a wallet, move your funds from an exchange to an external wallet owned by yourself, and then transfer them into another exchange. Then the travel rule doesn't apply. I don't see the issue here. People in this industry love to take a small negative and make it into a huge negative, and take a very small, minute positive that's literally almost useless and turn it into the biggest positive you've ever heard. So we're really starting to become kind of ultimate hype makers. And that's great, I guess, for recognition and for adoption, maybe, and for people to hear about the industry. But it's ridiculous when you really dig into some of these news stories. So if you're worried about the travel rule, just use an external wallet. Travel rule doesn't apply. Game over. Number 4 on the list of 10, Germany's largest bank joins JP Morgan's blockchain network. JP Morgan's blockchain network, well, there was a consortium of 80 banks. JP Morgan started with 12 or 13 on theirs. I've said this a million times. I'll say it again. There will be multiple blockchain standards in the world for different types of use cases. There will be, there will be a specific standard for finance. There'll probably be 20 standards for finance. Then we will get down to 1. There'll be 20 standards for trade finance. There'll be 20 standards for e-commerce. And eventually we'll probably get down to 1. And we may get down to 1 ultimate underlying protocol standard for everything. Who knows? What I can tell you is that we already kind of have a standard. It's called a Murcko tree. If you look at any of the current major blockchains, Bitcoin, Ethereum, Hashgraph, any of these guys, they all started with Murcko tree. Murcko trees, Murcko proofs are all part of all those underlying protocols. So we kind of already have a standard. What we've done, though, is build additional functionality on top of what Murcko trees can provide. So I don't see much news in this. Obviously, banks want to be able to send money quicker, have less staff, and be able to move money cross-border almost free without having to use SWIFT. Banks don't like SWIFT either, guys. Even though banks are part of SWIFT, trust me, they don't like SWIFT either. They don't like paying SWIFT. What they like about SWIFT is the fact that they can blame SWIFT and sit on your money for 2 weeks before they return it when you make a 1-digit error, or you don't specify an address on a receiver when money goes through SWIFT. Outside of that, though, they'd love to get away from SWIFT. And if they could create their own SWIFT and still charge comparable fees, 5, 10, 15 euro, US dollar, whatever, to send a transfer, make it immediate, but still make basically 99% of that money, 99.9% of that money, and put it in their pockets, of course they're going to do it. So those consortiums are only going to get bigger and bigger. The question is, who's going to win? Is it going to be banks that make the solution for banks? Or is it going to be an outside party like a Ripple or like a Stellar that actually create a system that the banks adopt? That's the question. Number 5 on the list of 10, Harbor tokenizes real estate fund worth 100 million on Ethereum. Lazy solution. Lots of these going around, guys. People are really lazy. Fund already exists. You tokenize it. The tokens are the rights to the underlying fund itself. All it is adding a layer of complexity onto an already complex and very, let's say, antiquated system that doesn't work. So no hats off to Harbor, no claps for them, no pats on the back. If they really want to do something, they need to actually change how the actual infrastructure works, and they're not doing that. They're adding an additional layer onto multiple layers that already create latency, already create counterparty risk, and they're just adding another counterparty risk. So this is the WFC for this week, guys. Who fucking cares? Number 6 on a list of 10, Canada's revenue agency is now curious about defunct crypto exchange Quadriga CX's tax returns. A little late to the party, guys. Kind of hard to get taxes back when the company's basically bankrupt. Should have done that before. Yeah. So anyway, great. I actually talked to the tax authority in Montenegro. Very surprised at how open they were to discuss, um, asking me for opinions on how cryptocurrency should be taxed. Obviously, they want to tax it because they want to make the revenue, but they also want to make it appeasing to crypto companies to come into their jurisdiction. So yeah, so there's countries around the world that are actively trying to make this work, and there's countries that are just slow. So I hope. I don't know what I think. I would assume they're probably looking in now, not so much to collect the tax, but to understand what they could have done, perhaps beforehand, to understand the money flows of this entity before it collapsed. So maybe it's more of a learning experience. Number 7 on a list of 10, Binance BUSD, the buzzed, kind of sounds like busted. Anyway, and Paxo stablecoin, latest to get U.S. regulatory consent. This is another small news, expanded hugely, right? So Paxo stablecoin regulatory consent. Uh, what it got was essentially that it was legal under the frameworks that currently exist in the U.S. And BUSD is simply a carbon copy paste of the Paxos USD stablecoin that's white labeled for Binance. So this is actually 2 who have WFCs this week. Who fucking cares? Even with stable coins as well, we're going to get to a point where we need some type of standardization, right? Because you can't have, what's the point of having 95 different types of US dollar stable coins? Do you really need that? Is there a need for it when supposedly they all have the same features? The only real thing we need is whoever's in the middle. Well, what we really need is a decentralized, completely decentralized and backed, asset-backed token that can replace, let's say, U.S. dollars, because most of these guys that are doing this there's still an intermediary. Yes, Paxos has a trust. Yes, it's more bulletproof than, let's say, Tether, for example. But if they were to go defaulted, you wouldn't get your money back immediately. It's a trust. It would take time. You have to go to court, do lots of things. It would take time to get that money back. It wouldn't come. It would have to get liquidated, et cetera. So at some point we need to standardize these things. And, Binance isn't going to be the one that standardizes it. So they can come out with as many stable coins as they want. They're not going to be the ones that become the go-to regulated stable coin offering, especially between, let's say, settlement between sovereign and our central banks and things like that. Big time money movements are not going to happen on an unregulated asset. That's for sure, especially one that's underpinned by an unregulated entity. Number 8 on a list of 10, get ready for Bitcoin 20K, says BitMEX CEO as Fed panic prints 53 billion. Here's the story I wanted to touch on. So who here, I was going to say show of hands, but obviously nobody's in front of me. Who here really understands how overnight rates work, what their function is, why the rate fluctuates, and why this 53 billion, 75 billion, or whatever amount that they've sent over the past 2 or 3 days is really not all that surprising, and really isn't a newsmaker, to be quite honest. Anybody already understand this, or am I gonna preach here for about 2-3 minutes? All right, I don't see anybody posting, so I'm just gonna go for it. So, overnight lending is basically used for large financial institutions, for the most part, when they need capital for 24 hours overnight. It's only for 24 hours for the most part. They pay an interest rate to hold that money for 24 hours. They do it for liquidity purposes. Understand that if a bank has $1 billion in client assets, they can loan out up to 10 billion. Yeah. So what happens then if they get redemptions for 8 billion? Or they have a liquidity issue where they don't have the money on hand to pay out withdrawals. Maybe they have a call that comes through on some type of options contracts, whatever. They don't have the cash on hand. They need immediate cash. Well, they go to the central bank, they go to the Fed, and they say, look, we need 5 billion overnight. Fed goes, okay, 2.1%. They go, okay, done. Next day, they pay back the 5 billion plus 2.1%. Game over, right? What happens though if the same thing, the same need falls across 5 banks, 6 banks, 7 banks? The Fed only has a certain amount of money that they earmark for overnight lending. Let's say, just throw a number out there, that's 50 billion, 100 billion, whatever the number is. Let's say though that there's 150 billion needed for today until tomorrow. What happens? The lending rate goes up. Why? Well, supply and demand, guys, just like any other market. So we've had many times in the history of not just the US, but many overnight lending markets where those interest rates will rise 5, 10, 15, 20 times over one evening. That doesn't mean that the economy is going to crash. That simply means that there's an overwhelming demand for overnight liquidity for banks. That simply could mean that there was some look, we had the oil markets, we had oil crash by 6%. You know what happens when oil crashes by 6% in one day? You know what happens? You get a lot of call options, a lot of options that get called, a lot of people that either lose money or that make money. And the bank may need to cover some of those. Now they have the access to the money, but they look for a bridge loan because they simply don't want to pull it out from wherever it is because it's earning them money somewhere else. So they ask the Fed for the money. That's what happened. And it's not a cumulative effort. It's not like if they do 53 billion today, 47 billion tomorrow, and 100 billion the next day, that now it's 200 billion. No, because it gets paid back every day. It's a 24-hour loan. It gets paid back the next day, plus interest. So anybody that thinks this is a huge issue is, and sorry for the French here, but this is just how I like to speak about these ridiculous things, is a fucking moron. Seriously, when you hear about this on CNBC, CNN, BBC, whatever news program you're watching, and I'm sure there's some big talking head on the TV saying how, this is showing that the recession is coming. This is definitely an earmark for recession. And if I was you, I'd be probably getting more of my money into cash, blah, 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 blah. You know why they say that? Because their money's definitely not in cash. Because when you get out of and you start selling to get into cash, you know what they're doing? They're buying. This is not a sign of a recession, not even close. Actually, it's the complete inverse of that. It means that banks need liquidity to cover more than likely money movements that are over and above the normal money movements that happen at the bank, which probably means that they're actually making more money. That's it, guys. So anyway, so BitMEX came out. They gave this 20,000. Arthur Hayes or whatever came out and said Bitcoin was going to go through the roof. It crashed. And subsequently, I think there was 151 million worth of stop outs. Now, if BitMEX was regulated, that would be Arthur basically signing his affidavit to go to jail. Basically, you can't do that. You can't go out and make a market call, and then then everybody follows you, and then they lose. They're not authorized to do that. They don't have the ability to give market advice. Anyway, moving on. Number 9 on list 10. Coinbase looks to add support for Telegram. So Coinbase adding more assets makes sense, especially to custody, especially their pro platform. Maybe this time we can ride on their coattails when LHV maybe approves something on their side and they do the hard work and then we just ride on their coattails. We'll see what happens. Number 10 on the list of 10, IOTA launches decentralized and autonomous industrial marketplace. So IOTA is definitely moving into, they've become kind of the car chain. They're moving into lots of doing chains and different projects for car manufacturers, for automation and things like that. So definitely makes sense. They found a niche. Like I said, guys, there are going to be lots of standards. I don't know of any other blockchain right now that's focusing on that as a standard. So good on them. Good on them for finding a niche where no one else is really penetrating, because it's gotten them a lot of business, and that probably means that they're going to see some success. And whether that may not mean they see success in the retail market, we may never see what they're doing. But those are companies like SAP, like Qualcomm, all these companies where the majority of retail customers have no idea who they are. But if they didn't exist, most of the gadgets and most of the things that they use wouldn't exist either. But they only know about, the name on the front of the package, not necessarily the name on all those parts that is inside. So good on IOTA. More companies, more blockchain, more protocols need to do this so that they can remain relevant. Okay, Kevin explains crypto this week. Let's get through this one because this one's going to be a fun one. Kevin explains this week. One of the my most hated and loved words in the English language, roadmap. So let's say before I got into crypto, I knew what a roadmap was. I've seen them. I saw them before. I saw Microsoft release roadmaps over the years. I even saw Google roadmaps. I even saw roadmaps that were tied to building out of large-scale developments in cities. One thing I can tell you about roadmaps, at least from the real world, meaning pre-crypto, let's say before crypto, BC, let's say, every year BC before crypto, roadmaps are made to be broken. Any major roadmap I've never seen actually follow to fruition, right? The main thing is because roadmaps are basically an estimation. So the real definition of a roadmap is usually they're development roadmaps. So you take an estimation, a forward-looking estimation on how long it's going to take you to develop a specific product and launch it to the public. That's what a roadmap is. It's a very high-level overview of a development cycle. And it's done before development usually even starts. Then, as you move forward, obviously, those roadmaps usually get adjusted, right? So for those of you who are new to CoinMetro, I'll give you a little background on the word roadmap, right? So we had a roadmap, and I think we edited it or adjusted it, I don't know, off the top of my head, maybe 477 times. And we got a lot of shit for that over the months and weeks and whatever and year or years, now that we're about 2 years into the initial inception of CoinMetro. So we got a lot of shit for it. I was always pretty transparent about our roadmap. Sometimes, I like to be transparent. We've had this conversation on Telegram actually between a lot of contributors and a lot of new people. I like to be transparent. I treat Telegram as if I was talking to somebody else in the office. This way, if there's some type of inter-office communication that says, look, I think Tuesday we're going to be able to roll this out. And I come on and say, it looks like maybe Tuesday. And then Tuesday becomes, I don't know, Friday 2 weeks later. And somehow, we keep missing milestones. What people fail to realize is that if you've ever actually worked on a project, what gets released public is only when you're 100% sure, right? You get to a Thursday evening and say, okay, we're 100% done. Tomorrow we'll release it, or we'll release it in 2 weeks, just to make it seem like we're a little bit of forward thinkers here. I don't like to do that. I don't like to me, that's lying, right? It's generally lying. And it's different when you're dealing with the public at large. I'm not going to put a billboard up in Times Square that says I'm going to release something on a Tuesday based on what 3 people said in the office. But when it comes to Telegram, I treat that, like I said, you guys, most of the guys in there were contributors. That means they helped us get to where we are. And if they're not contributors, they're clients, which means they're still helping us get to where we want to go. So for me, it's a little different than making a worldwide announcement. It's about announcing it to our community that I feel would probably appreciate the fact of knowing something that's that we believe is going to happen, even if we don't have a concrete stamp of approval on the date. So anyway, roadmap, that's a long one. I don't know when we're going to cut that off in the short video, but that's roadmap. Okay, so let's jump into the live Q&A here. Krispy Kreme, how's funding? Bjorn, yeah. So funding. So I have a call actually a half an hour after I wrap up the AMA today with our boys and girls in Brazil. So the target, I think we're 4.5 weeks from the end of the LOI timeframe. Right now, we're going over financials, mainly for the CSD, but we're going over financials on both sides to fine tune the amount that's going to roll in and the percentages that will be offered in terms of equity on both sides. I think we're already pretty far through that negotiation, but it still needs to be completed. This call will get us almost to that goalpost, if not past that goalpost today. And then the next step will simply be to draft in official agreement, get the agreement signed, and then get the money in place. I also had a very good conversation in Montenegro with a gentleman that is right now going over lots and lots of documentation that I sent him for the CSD and for CoinMetro. And we'll see where that leads. We also still have our boys in the UK. I haven't gone back to follow up with them yet. I will, though. However, I'm going to be in Korea starting on Monday for this International Bar Association Summit, and then more than likely Korean Blockchain Week after that. But sometime when I get back, I'll be following up with London. But Brazil is scheduled to close on or before the end of October. So I will know much more today after the call as to that specific timeline. Mohammed, hey, Kevin, last year you mentioned that you were a bit late to the FX space and regulation hindered FXPig growth. How does that affect your day-to-day operations with CM, and does that give you a sense of urgency? Any news on the currencies? So yeah, I did mention that. And when I said late, we were a decade late. Because FX regulation started to be talked about. Now, I was somewhat involved in let's say some of those smaller talks, but as a trader. And those talks started 97, 98, 99, and started concluding around 2000, 2001, 2002. That's when most regulation really started to roll out. And FXPig opened in 2010. So we were quite late. And it was not the only thing that kind of slowed growth. We purposely slowed growth in many ways inside FXPig, mainly because the idea at first wasn't to create this huge FX broker. It was to specifically help a certain subset of traders make money. And we've done a very good job at that over the years. When you talk about CoinMetro, regulation has just started and we're still in the talk phase. So we're still very early. So is there a sense of urgency? There's always senses of urgency for different things. So right now, I would say my sense of urgency revolves around being one of the first players to solve the capital market problem, which is a combination of CSD and MTF. And there's some urgency there for sure, more so than on other pieces of the project, more so on, let's get our volume to, 1 billion so we can, I don't know, buy a yacht and drive a Lamborghini on top of it. So there's always senses of urgency in business. In terms of overall, I don't need a sense of urgency to move. So if you need a sense of urgency to move, you lose. You should always be acting as if things need to happen. Now, it may not look like that from the outside because people just don't see something happening every day. But you need to every day you need to accomplish something, right? You can't just sit back on your hands and wait for things to happen. So there's always this outlook that we need to move. And there are specific places where senses of urgency are needed for sure, because you really need to not just not really for myself, but obviously I'm not the only person here, right? And if I was, we wouldn't have accomplished, most of the stuff we've accomplished. So sometimes, you need to spread that sense of urgency so that people understand, the value of what we're trying to bring to the market. Does FXPig accept clients from the US? No, unless they're ECPs, which is eligible contract participants. FX is a bit of a different game. FX is regulated by the CTFC. The CTFC requires, and the NFA, and the CTFC requires that in order to solicit retail clients for FX trading in the US, you need to be licensed by the CTFC. CFTC, sorry. And we're not. So no, only if they're eligible contract participants, which means they're not retail clients. Jens, I would assume the CSD and CM can't be within the same company going forward. What is the risk that you would become more motivated to continue the CSD road than continue the CM journey? For me, as the type of person that I am, there's no risk. CoinMetro was here first. CoinMetro still has a very bright future, and CoinMetro is going to do many things the CSD won't. And CoinMetro is required in many instances in order for the CSD to gain traction and actually see growth. And even as the CSD grows, CoinMetro grows with it. It may not get full advantage of everything the CSD does because there will be other MTFs eventually connected. But regardless, we will be one of a very handful or few, maybe 50 at most, and that could take years, maybe 25, maybe it's even less, around the world that will cater to the vast majority of volumes that flow through these tokenized securities. So it won't lessen. Now, from day-to-day basis, sometimes I have to focus a few hours on the CSD. But the point is when I speak about the CSD, and when I was in Montenegro, I speak about both. I can't speak about one without speaking about the other. You notice I don't have a CSD t-shirt, right? I wear these things every day, Saturday, Sunday. I go to bed with one on. I pretty much never take them off unless, I have to. I don't have a CSD t-shirt. So my goal or my time or my energy or my motivation won't leave CoinMetro. Doesn't matter whether, if for me, if it was about money or income or growth, I probably would have walked away from both these things and just went on a consulting gig and charged $250,000 every time I gave somebody some advice. And I would have a list of clients that would pay that. And I haven't done that because it's not necessarily about the money. Obviously, anybody that's in business tells you they're not there for the money is lying to you. You get into business for money. But at some point, it's not just about the money, right? When you have some type of niche, when you're good at something, you can make money. Money comes, money goes. Money's not the most difficult thing in the world to acquire. I want to create something. I want to create something that actually makes a change and makes it easier for people to do what I'm doing now in the future, right? If my daughter's children, if somebody wants to get into this business and take it over, and I don't want them to have to go through the same struggles that I did to try to make it happen, right? So Yeah, my motivation won't change. That motivation is a circle, and CoinMetro is part of that circle. It's not the complete circle, but it's part of it, and it's a big part of it. So, from Musab, what will you be doing at the International Bar Association Summit? I'll be on a panel, which basically discusses the pain points in capital markets, how technology can reduce those pain points, and how regulations and legal play into how the technology can do just that. So I'm going to be in a panel discussion with Remo Hammerberg from Sorainen, one of the top law firms here in Estonia, and co-founder of the CSD. So we will basically explain how DLT solutions can create a CSD infrastructure from a very high level. We only have about 20 minutes to basically undo those pain points that exist inside of the capital market. So that's why I'm there. CSD is progressing nicely. Sorry, James. Okay, CSD is progressing nicely. We are back and forth getting agreements signed with the development team. Development, I think, will start next week or at latest the week after. And then we're 4 months away from jumping into the sandbox. When it comes to Montenegro in general, when it comes to the sandbox, CoinMetro, we should have a preliminary copy of the application package on Tuesday. We will provide some opinions and some feedback on that package. And then I would suspect by the end of next week or the week after, that will be ready. We will then apply. And then within 2 weeks of us applying, we should be inside the sandbox. At that point, CoinMetro will have established a company in Montenegro. We will have established bank accounts in Montenegro. And we will launch basic CoinMetro services, everything we offer right now in Europe, plus the addition of tokenized securities. And then as we move through the sandbox, we will add in functionality specific to those tokenized securities, meaning reporting that is up to par with standards, onboarding tactics through CoinMetro Direct for primary issuances of regulated assets. So most of the work we will be doing in the sandbox, and when I say sandbox, it doesn't mean it's production. It means you can go over there, open an account, you can trade, you can do everything. There will be limitations that we will set on ourselves in terms of how many assets we will list, in terms of how many clients we will allow into those assets, et cetera, but it will be live in production and under a regulatory umbrella inside that regulatory sandbox. Tram. So Tram, in terms of coding and we finished the initial coding last Sunday. We started to go through initial bugs, basic bugs, got through most of those, then started going through bugs that were related to just UI UX. Most of those should be completed now by Sunday. The last step this Sunday. Now, the last step is to go through the finance side, right? To make sure that we have specific protocols on how we deal with risk in terms of the currencies that we're allowing to put up for collateral, how we deal with liquidations when collateral is in a different currency, how we deal with other different things around those same lines that deal with on the finance side of the business. Once that is completed, then we launch it. So we are close in terms of tech. Sunday or even before Sunday, it will be ready to roll. In terms of UI, UX, and tech, it will be ready to roll. I think at that point, what I will do is ask our development team to get it on demo and sandbox so that people can demo it. So they can demo it and we can continue checking about bugs and checking about all that other stuff with you guys testing it out, but in a demo fashion as finance and operations work through to make sure that all our risks are as tight as they possibly can be. We also have to look at collateral limits and things like that, which we currently have on the trade the margin platform. We obviously need to extend those higher, and we need to collect the data. Well, we collected the data, but we need to analyze that data and see how high we can go, and that will take a bit of time. If you want, tag me over the weekend, or actually tag me early next week. I'll be traveling on Monday, but Tuesday, Wednesday, I will give you guys a fair overview of how finance is coming along and give you more of an idea of when we will go fully live with the Tram. But it's coming, and like I said, from a tech standpoint, UI UX standpoint, this Sunday it's going to be done. Now it's just finance and operations, the final tweaks to make sure that we can offer enough liquidity and enough, not only liquidity, but enough access to collateral so that it makes sense to use a Tram, but that we're also limited in risk on our side. 25 currencies. Yep, like I said, so the provider originally had said mid-September. Now it's been mid-October. I mentioned that I think last week, the week before, or maybe I think both those weeks actually it was asked. So mid-October is when we will have access to the complete APIs, and they will have the ability then to allow us to transact in those 25 currencies. I'm pushing to get the API documents from them before, let's say, beginning of October, so that we have 15 days at least to integrate. If we get them on the 15th of October, it'll probably take us minimum a week to integrate, depending on the schedule. Will be right after TRAM is finished this Sunday. That the UI UX work has already actually started, but will be pushed majorly onto the website to get the website up and running. So it depends on how that development cycle looks, who can work on the API. But I would say that end of October looks to be, if this provider is ready and ready to go by mid of October, then end of October would make sense. XCM burn is going to happen pretty much right after TRAM as well. So as the UI UX guys move to complete the website, our programmers, developers, backend guys will move to get the XCM burn online. Has trade volume dropped off a cliff on CM? There seems to be only a couple of pairs doing a bit and other newer tokens doing nothing at all. Can CM get through these periods of low volumes? Well, we've been doing it on no volume for a long time, and we've been doing it on low volume for months now. So yes, we can. It's we're basically teetering now. So we've always been on kind of this movement where we weren't doing sales and conversion marketing. We were doing branding and awareness marketing. And we were able to maintain a certain level of traffic doing that. Now we're getting to the point where we're going to hit the top of that cliff, where we're going to have to move agilely and quickly from branding and awareness to sales and conversion. And we're getting there quickly. When we get there, we have to turn on the switch and be able then to start bringing on new clients and up those volumes. Market Maker is part of that strategy. Getting the TRAM, getting margin lending, getting all these things ready to roll, getting our platforms as fine-tuned as we possibly can, and getting those 25 currencies on board are all part of this plan to get a finely tuned offering that we can then throw into that sales and conversion with a new website and be able to convert more clients. So it's all part of an evil plan. It took obviously a bit longer than we initially thought way back when of how long it was going to happen. But we're very quickly getting to the point where that switch is going to be turned on. We still need funding. We will do what we can with marketing with limited funding for sure, once we get to that point either way. But once funding rolls in, it's going to allow us to spend a bit more money and be able to fine tune our marketing strategy so we can find copy that works and places where that copy is giving us the biggest ROI, so we can start to push not only our own capital, but also revenue capital we receive from new incoming clients back into marketing. Why list more coins at this stage? Now you already have 6 coins without a transaction. Look, it's a chicken and egg scenario. So let me put it to you. If we had listed nothing up to this point, would you have come in here and said, it's a good thing you haven't listed anything because no one would be trading it? Or would your comment more than likely be, you guys promised to list whatever, and now you haven't listed anything? And so my point is to say that when we first started listing, we didn't know what volume would or would not look like. Now we know that right now, without marketing, obviously, that volume is low. But we have we still need to make sure that LHV, our banking partner, is looking at these. We can't keep them on the back burner forever and then hope that when volume starts coming in, we can send them 600 listings and all of a sudden they'll just approve them all. So it's a process. So we need to keep that machine moving, because if we stop that machine from moving, it may get stuck and require lots of oil to get moving again. So let's make sure that machine keeps moving, getting these things onboarded. It's also going to help us move to the point where they have the self-assessment guideline, right? So we will continue down that track. The market making is coming. Market making will provide liquidity behind these, where we will then be able to go into communities, more communities, and bring people in to test out to see how trading rolls. And we will see volume there for sure. So you can't, whatever side you're on, to stress this point again, whatever side we choose, there's always going to be a question of why we chose that side. if it doesn't, if something works out, nobody ever questions, right? But there's also a perception of what is working out, right? If you do this much, does it work out? Is everybody happy? Or do you have to do this much? And if you only do this much, is somebody going to question whether you did it? So you never know. But no matter what you do, there's always going to be questions. So we just want to keep the machine oiled and working and keep the relationship with the bank open, rather than sitting back, not having more communications with the bank for months or whatever, and then all of a sudden try to open up this conversation again. And at that point, maybe the bank changes. Maybe there is no self-assessment guideline. Maybe at that point they decide that new listings don't really make any sense, right? So we want to keep the relationship open. We want to keep it fresh, and we want to make sure they understand how our business works. And the way we can do that is by keeping this back and forth constant. Yeah. Margin posting. Yeah. You're right. Yeah. Is October security? Do you only have funds last? October is security. No guest appearance from Oliver today. Well, I asked Oliver. He said he hated all of you and he didn't want to show his face. So there you go. No, Oliver's actually in a meeting right now. I think right adjacent to this. Yeah, I can't show you because maybe I'll get the camera in there in a second. We'll see if we can spy on him. But he has a meeting actually with our marketing team inside of one of our meeting rooms. So, have you heard of Syntex Exchange? They claim to be selling synthetic assets like crypto, commodity stocks, metals, etc. Is that similar to the STO market you were trying to make? Hey, John, no, it's not. I don't want to make a synthetic market. Synthetic simply mean a derivative, for example, is a synthetic. So let's say I have this Finnair membership points card, right? And you want to buy it, right? I only have one, but you know what? There's 10 of you that want to buy one. So I create this piece of paper that basically gives you rights or to a portion of this card, and I sell it to you, and then I sell it to him, and I sell it to her, and I sell it to him. This is a synthetic, a derivative of this physical product. So that's nothing new. There's already synthetic markets. Synthetic markets do nothing to actually give legitimate price discovery to the underlying market. So no, it doesn't. It's not something what we want to do is create a natively tokenized market. That means that new companies that need to raise capital, that want to sell some debt or acquire some debt, that want to sell some equity, that want to create some type of convertible note or any type of tradable product, instead of going through the old means of getting it done and then tokenizing it as a right, we will tokenize it from inception. This reduces all these different pain points that exist in the secondary market and primary markets now, which are, I can name a few of them right now, just off the top of my head, since I talk about this all the time. We're talking about chains of custody. Chains of custody meaning when you buy something, there has to be many, many, many intermediaries. This all causes risk. That also causes latency of settlement, which is another risk. And because it's so difficult to gain access to certain markets, it also reduces the amount of liquidity available in the market. So when you go natively tokenized and allow cross-border access and instantaneous settlement, you reduce all of those. You remove them. And now you have a truly global market that has access to liquidity and that has immediate settlement and no counterparty risks to speak of. Well, almost no counterparty risks to speak of. So it's a completely different thing we're talking about. To create a synthetic market is easy. You just put up a matching engine and you allow people to trade stuff that doesn't really exist. That's easy. This is a much bigger effort. You're welcome, Alex. All right, guys, I think we have 2 questions here from Peter Mack, actually, or 3 questions on Reddit. So I'm going to jump onto those real quick. Peter Mack, first question, can we see the famous Oliver? So I'll try to, let me see, hold on one second. Let's see if we can catch his head here. So he's actually in that room over there. I think that's the back of his head. Yeah, that's the back of Oliver's head right there. So there you go. You got a glimpse. But yeah, anyway, I'll see if we can get him in here before we close the show off. How's that? Since Tram is no longer a token, that's Peter Mack. Can you explain how it will work for working out profit, loss, and tax? Example: if a trader takes out lots of positions on the same asset and trades a lot, it could be difficult for everyday folk to work out gains per trade. Will there be a way of working out gains on a Tram overall when you sell your Tram or cash out part of it. I know we need to get professional advice. Okay, so yeah, this is not professional tax advice, blah, 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 disclaimer, disclaimer, disclaimer. Actually, I think having the tokenized aspect made it even more difficult, because in that aspect, you're looking at just a token and an underlying portfolio that's adjusting the token price. Here, let's say the tram driver, or let's put it in this case, the manager has a wallet. You have a wallet. Your wallet is mimicking every trade that happens in this wallet. Every time there's a trade here, trade happens here. You have the history of all those trades. At the end of the day, normally for tax preparation, it doesn't matter trade by trade. It only matters the NP&L of a specific period, and you'll be able to pull that as a statement, let's say. So it should be relatively straightforward, to be quite honest. You're simply going to pull a transaction history like you would if you were the trader. That's going to show all the trades that were made, the P&L over that specific period, and it will show any fees that were incurred, which will reduce the overall P&L from a gross P&L to a net P&L. Should be fairly straightforward. So Nick Singh also came in, and I think I've already covered, so I won't go into that. I think I just answered his kind of his question as well. And then just me asking what kind of track record or performance is required by tram traders? Any validation performed by CoinMetro? So we will allow anybody to open a private tram, meaning you can open a tram and then advertise that with a link to your friends, colleagues, associates, whatever, but we won't post it on the website so everybody else can see it. We will have a vetting process. That vetting process will be similar to what FXPig does. And yeah, that's 3 months minimum. There are some other things as well. We still haven't completely gone through that process. We have a bit of time to do that. We will bring in algorithms initially, maybe not on day one, but close to day one as we can, that have a track record elsewhere that we can verify, so that there will be. Now, we won't officially, let's say, put a thumbs up on these things. We're not giving advice, right? We're not licensed to give advice. But what we will do is simply say that track record verified, whatever. We've done this, we've done that, we've done that. And then that will be shown as, I don't know the exact verbiage of what we'll call these things. Whether they're approved trams, vetted trams, trams with a history, whatever. I don't know. But we will come up with a verbiage that's legally acceptable. Was the CSD always part of the CM plan? Yes and no. So in initial kind of putting this on paper in terms of going from a non-regulated to a regulated market, settlement was always in my mind. I didn't necessarily think of the CSD in terms of how large we've scaled it to this point now that we're developing one. But yes, it was something that was always in my mind, because when you talk about regulated assets, you need to settle them. However, up to this point, settlement has happened at the exchange level for non-regulated assets. So there's always a question whether regulation would adapt to that and allow settlement at the exchange level. Now it's become clear to me that they won't. So at least in most countries where it counts. So actually, Remo, one of the co-founders, the attorney or lawyer here in Estonia, came to me with the idea in December. And since it had already been something that was kind of reverberating in my mind since the beginning, I immediately said, yes, let's do this. So it was and it wasn't. It was in terms of, there was always a question in my mind when we got to that point, how we were going to deal with this. And now it has become a business, basically. Sorry, did I hear mention or suggest CM will be allowing tram managers that... Sorry, did I hear you mention or suggest CM will be allowing tram managers that are approved algos? What I said is that anyone will be able to open a tram, but they will be private trams, meaning that they won't be posted on the website for everyone to see. There will be a link that people will be able to invite people to their tram. There will be a process by which we will validate trams and then show them on the website. And we will be inviting some algos from specific companies initially that we know that we can verify track records externally to post as those top 1, top 2, top 3 trams, whatever, when we actually start going live. So hopefully that answers your question. Can Sean So is asking, can I use my XCM, which I don't intend to sell, and give it to the tram manager? Yes, that's essentially how the tram works. So basically, you open a wallet and you add collateral to that wallet to allow the tram manager to trade. That collateral can be XCM. That means they can trade, open up positions in other assets using your XCM, and you make a profit when they make a profit. And the collateral is held in XCM. So yes. All right, guys. No other Reddit questions this week, so short Reddit week. Any other questions here, guys? Go ahead and post. We got 6-7 minutes before we hit the top of the hour, I think. Any faucets being planned to drive some volume? When you say faucet, I assume you don't mean like a crypto faucet that gives away free crypto. I assume you mean like some type of business development. Is that right? To drive volume. If that is the question, I'm constantly in discussion with different companies, groups that need fiat on ramps, off ramps, that are looking to move large amounts of crypto. We're obviously in a regulated environment. Okay, so some of those things end up being things we can't pursue. Others are things that we are pursuing and we've been pursuing. New ones have just come into the playing field in the last couple weeks, and we're back and forth with those guys to see how we can come to an arrangement to help them do their clearing. They take time, but yes, there is always something happening there, and part of that will be in Montenegro as well. So Montenegro, I think, will drive some volume to us. We have no competition there, even when it comes just to basic crypto exchange. And there's definitely some appetite there. So that's one of the business development angles that we're working on. Cagrox. In Tram, if profit erodes into the reverse XCM exchange rate to convert the mirrored allocation back to XCM, will that impact on the trader's performance? Okay, I think I get your question, but your terminology, let's see. Okay, so if the profit erodes into the reverse XCM exchange rate to convert the mirrored allocation. So what you're saying is someone takes the XCM collateral, they buy Bitcoin, XCM falls by X percent. And then, there's a loss on the Bitcoin side, and then the collateral then needs to be converted to cover the loss. Is there an impact on the trader performance? In theory, no, there would be no impact on the trader performance. However, that is one of the questions right now that's floating between finance, because basically we have to make sure that we don't run a risk on our side when there's some type of dramatic volatility on either the collateral side or the open position side, where we have to liquidate positions and we're using XCM to do so, or the inverse, where we're using Bitcoin to do so, but then we have to pay or calculate, let's say, fees or loss in terms of the collateral. So those are the main conversations that are happening right now. In theory, though, the system will be designed and has been technically designed in a way that no, it would not affect performance. In which way will the CSD affect the ETCF? Well, I guess the one way it could affect is that the CSD will be onboarding lots and lots of different issuers, which will allow CoinMetro then to easily onboard those issuers as well to create more expansive and more robust ETCF offerings. Is there a conflict of interest if the exchange itself is the market maker? No. No. Well, it depends on, legally speaking, many regulated exchanges, regulated broker dealers are market makers. So it depends on how you market make. If your market making is simply there so that every time there's a buyer, there's a seller, and every time there's a seller, there's a buyer, there's no conflict of interest. You are helping make a market so your clients can trade and not see slippage and not see large spreads. If you're wash trading or doing something to move the market in a specific direction so that you can profit off of, let's say, your client's losses, then yes, I would say that's a conflict of interest. If I use XCM as collateral on Tram, does my XCM get converted to the Tram manager's positions? Or do I get to hold on to my XCM? Or does my XCM get converted to the fund manager's positions? So it's just like if you're margin trading, right? So when you margin trade, you put up a collateral that collateral maintains. So that collateral stays. You're not converting that into the other currency that you're trading. You're simply using that collateral to be able to trade those other currencies, and your P&L is then paid out in euro, right? So it's the same thing on Tram. The only difference here is somebody else is managing the assets. So your collateral stays your collateral, does not get converted. Okay, guys, we're right about at the top of the hour. Any other questions somebody wants to throw out there? Give you guys, oh, here we go. Here comes another one from Casey. There are now CoinMetro hoodies. Actually, no, it's not a hoodie. It's I told you this is a necky. It's just kind of cold out today here in Estonia. So this is actually like it's a necky. I don't even know if that's a word. But yeah, not hoodies. We actually did have a couple hoodies we made that were given out to staff at one point. But we're in the process now. I told you about this possible CoinMetro T-shirt of the month club, right? So we're in the process of creating designs and things just for that. So there definitely will be some hoodies at some point. And the CoinMetro T-shirt of the month club, I'm hoping to launch before Christmas. So maybe in November. And then everybody who subscribes will get their first T-shirt, and then eventually we'll move into hoodies and things like that. And then those will be specific for that club. So if there's 50 people in that club, 100 people in that club, 20 people in that club, those are the only guys, except for maybe me, that get those shirts. And then we will start to create different items for a store for sure. We're getting there, guys. Yeah, Neki. I don't know if that's but yeah, this is a Neki. Yep, that'll be the only way you can join, actually, is with XCM. So we haven't finalized the details on how that'll work, but we are already working on designs for those shirts as a little side project. So anyway, we'll let you guys know as soon as we come up with some more details on that. But yeah, you'll definitely be able to join with XCM. All right, guys, I guess we'll leave it there. As usual, thank you guys for stopping by. Oh, we got another one. So Tram is basically a margin trading with the allocated margin coming from the subscribers. That's correct. Basically, the manager has some of his own capital as collateral. His clients come in and give him additional collateral. He then is mirroring his trades on his own wallet back to his clients' wallets, and the profit and loss is then a little piece of that, a percentage of that is paid back to the manager as his fee. So yeah, that's exactly what it is, basically in simple terms. So managers are able to collect more funds than they have on their own, so they can trade more and earn more money. And people that aren't traders are able to follow decent traders or decent algos that they otherwise wouldn't be able to follow without having to pay a set fee. They only pay money when they earn money on a high watermark basis. Okay, guys, so have a good weekend. Thanks for coming. Thanks for the questions. Appreciate it. Thank you to our Telegram guys for getting the news together. Sorry, which means XCM plus profit if plus less XCM if. No. Well, obviously, if you lose, you can lose part of your collateral. That's for sure. I guess that's the case. Yes. If you make money, though, that money is actually paid out in euro. The profitability will be paid in euros. Somebody just asked Tram and funding. Already answered those, so you can look at the beginning of this chat. You'll see it. Funding call today with our Brazilian buddies. LOI ends at the end of next month. That's the maximum amount of time they have in order to move funds in place. And Tram, technically UI UX all ready by Sunday. Finance and operations still need to define a few things to mitigate risk and make sure that there is the least amount of risk possible on our side in terms of liquidations and things like that, which we've already discussed here. And I will say early next week I'll give a better time frame, but it's coming and it will come pretty quickly. Look, we're going to improve views on YouTube. That may seem like it should be a priority right now. Priority right now is to make sure we get our products launched, make sure we get into that sandbox, make sure that we're ready to roll, make sure we have something and have a product offering that no one else can match. And then we exploit that product offering through more views on YouTube. So sales marketing is coming. It's coming very, 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 very shortly. And we're right now. I already mentioned this. You can go back in this chat, but we're at a climax right now between branding and awareness to where we need to go into sales and conversion, and it's coming. Yep, little views. Yep, but little views because we haven't pumped any marketing there to see more views, and we've done that partially, yes, because we've been fundraising, but also partially because we need to build something that people want to see. You know, if you sell something people don't want, they don't take a second look at you, even when you may have something they want. Right? That's first impression is makes a big difference. Okay, guys. So have a great weekend. Spend time with friends and family. Don't look at prices. Buy some XAM. You know the whole rant. And tag me on Telegram. I'll catch you guys there. I'll answer questions as they come in. And yeah, thanks again, guys. Onwards and upwards. See you guys next week here and on Telegram. Cheers.